Welcome to the Rogue Trading Communities video, and this video is about the 4 phases of the market. Well, in this video, we're gonna talk about different types of sideways markets, and in the same time, I'm gonna talk about how you can recognize them in the actual markets out there with some practical examples, and I'm gonna show you a simple trick to draw the right levels to mark the sideways market, and at the same time I'm going to give you an idea about how you can trade them at the very earlier stage. In the sense, you can buy at the lowest price as much as possible and you can sell at the highest price, and that is all about trading, and that is something that it can be achieved if you truly understand a simple market structure. Okay, so let's get started. Now, before getting into the topic, let's talk about the price actually. Okay, price in the sense, as you can see, I have a chart right here. This is the Axis Bank Limited chart, 15-minute time frame. Okay, as you can see, this chart is creating an uptrend right now. Now we have a sideways market right here. Now, when we talk about market structure, right, how price works, because price is not random, right? Price has a market structure. Price doesn't create, random structure like this. No, price has a proper, it creates that higher high, higher low structure properly, right? And obviously, it creates some sort of a sideways market. This is where the random territory where market might, kind of like face resistance and support. And eventually, it will give you a breakout towards the higher side or lower side. And it will again follow that same, higher high and higher low, or lower high and lower low structure. And that's how the simple market structure, right? That's a simple price action that everyone know about it, right? And if you don't know, like let's assume if you are not aware about it, well, I have explained the very basics of market structure in multiple time frame analysis concept part 1. Okay, go to a channel, go to the playlist section, click on volume spread analysis signals and concept section, and go to the multiple time frame analysis concept basics part 1. And this video is important for people who wants to understand a basic market structure, the basic price action. Okay, now coming back to the point. Now what I wanted to ask, obviously this section where markets creating that higher high, higher low momentum, this is fine, right? Obviously this is where usually you can, some people use trend lines and so on. They take a trade on based on breakouts, and it's obviously this is a easier part where you can actually take it. But ultimately market is a combination of both higher highs, higher low, lower high, lower low structures. And at the same time, market is a combination of sideways markets, sideways range actually, right? And now if you ask me, let's talk about price. So this is an uptrend, right? This market is an uptrend. So according to, any traders out there, there are 2 participants out there. So who are these 2 participants? One is buyer and one is seller, right? There are only 2 participants in the market. So now in an uptrend, if buyers are more compared to sellers, so the probability of market creating a higher high momentum would be more actually. But in case if sellers are more and buyers are less, so the probability of market creating a down move would be higher, right? That is a simple concept of trend actually, right? That's something everyone knows about it. But what do you think happens in a sideways market? Do you think sideways markets are random? And do you think sideways market cannot be identified into different types of sideways market? No, it can be identified. In fact, we have to do it. This is something that no one's doing it. Well, we will do that actually. Okay, we will go in the right path and we will make sure that we will choose the right market structure knowledge in our trading arsenal. Okay, let's get started. Now, when we talk about sideways markets, there are different types of sideways markets, and that's what we're going to talk about in this particular video. And now, the phases of the market can be divided into 4 different types: accumulation zone, reaccumulation zone, distribution zone, and redistribution zone. So it is mentioned as 4 different types of zones. Now, what does a zone does, and how can you differentiate these zones actually? And that is what we're going to talk about. And I'm going to show you a line diagram right now. Okay, this is a line diagram I prepared for you guys. And as you can see right here, I have all the different types of zones in one particular frame. And this is a cycle actually, because this is the exactly how market works. just watch this entire phase and just accept the fact, and this is how the market works in terms of market structure. In a sense, there will be differences. I'll tell you what are the differences actually, but this is the overall cycle actually, the basic cycle of the market. Okay, let's get started. So let's talk about the accumulation zone first. So where does the accumulation zone occurs and what is an accumulation zone? Where accumulation zone is where the smart money is actually buying a stock. It could be anything. I'm referring as a stock because stock is the basic term of stock market, but there are different markets out there. It could be derivatives such as futures and options contract. It could be commodities. It could be currency. It could be anything out there, but I'm going to refer it as a stock. Okay. Now, when smart money is interested in a certain stock out there, they will be buying at the lowest price, right? Very simple. They will be buying at the lowest price. If they're buying at the lowest price, then obviously it will be after a downtrend, right? When market is creating that down move, after a downtrend, that's where smart money tends to buy the stock actually. And that is where you're going to get the accumulation zone. And the meaning accumulation is nothing but smart money will not buy immediately actually. In the sense, let's assume smart money wants to buy 10,000 quantities of a certain stock out there. Do you think they'll buy 10,000 quantities immediately at a certain price point? Let's say this price point is 100 rupees actually. Okay, this price which the stock is trading right now is 100 rupees. They will not, the moment market reaches at this point, they'll not buy the entire 10,000 quantity at this section. They will not buy it. If that is the case, market will drastically create an up move because demand increases so vastly that price will just bounce up. So that is what they would not buy like that. It would disturb the liquidity of the entire volume flow. Okay, so what they will do is, instead of buying 10,000 quantities right here, they'll start buying 1,000 quantities actually. It's like, they'll buy 1,000 at this point, they'll buy 1,000 at this point, again 1,000, 1,000, 1,000, 1,000, 1,000, 1,000, something like that. They'll keep buying at this zone by keeping the price at a certain range actually. And that is where you'll get that sideways market. And sideways market is very important, that no one teaches these things actually. Everyone will talk about trend lines, breakout and all these things. But no one will tell you exactly why sideways markets are so important actually and how you should trade them. No one talks about it, and we are going to talk about it for sure, right? Let's start it. So accumulation zone. So what are the criteria of an accumulation zone? The first criteria is accumulation zone occurs after a downtrend. Point number one. Accumulation zone usually after a sideways momentum, after all that sideways cause been built actually, it will give you the breakout towards the resistance of that accumulation zone. So if you talk about, this is the resistance of that accumulation zone and this is the support of that resistance accumulation zone, right? So it will break towards that resistance. Okay, and always after a downtrend, sideways momentum and uptrend will start, and this is the sign of an accumulation zone. Okay, and if you want to know how to trade them, I will definitely teach you guys. I've already done a lot of videos, but still I'm going to make more and more videos actually, because the more videos, the more content I'm going to upload, the better you're going to understand it. Okay, now I'm going to show you some example of an accumulation zone. See here, I've taken an example of TCS. Okay, this is a 30-minute time frame. See, after a downtrend, right? After a downtrend, market went sideways and it is breaking towards the higher side, right? This is a pure example of an accumulation zone. Okay, see, it's very random. This is at least, it has a structure: lower low, lower high, lower low, lower high, lower low. This has a proper structure. Even this, in this particular case, it went up, it created some sort of a sideways momentum, it just got a bounce. Okay, indicating this entire area itself is a sideways momentum, if you ask me, right? This entire area is a sideways momentum. This is just a kind of a shakeout. It's a concept of shakeout, and see, it's giving you that breakout actually. Okay, simple. So this is a perfect example of an accumulation zone. I'm going to give you one more example. See here, market actually created, after a downtrend, it went on a sideways momentum and started breaking towards the higher side actually, right? And this is a perfect example of an accumulation zone. And usually, if you are a person who's been in the markets for a very long time, and if you're a beginner, my recommendation is that you guys have to stick with the equity markets at the initial phase of your trading journey. Okay, trust me, Nifty and Bank Nifty options are great actually. Okay, even if you're from another country out there, you're not from India, if you're watching this video, you might be interested in Forex, you might be interested in commodities like gold and so on. Great, it's absolutely amazing that you can trade it. And I'm not going to deny the fact that you shouldn't trade those things, but you need experience to be built actually. You need real practical experience to be built. Stick with the equity markets, it's way more around. In the sense, stocks actually. Buy the stocks at the right time. And when we talk about equity markets, everyone would buy at the lowest price that is available actually. Right? So accumulation zone is the perfect level, perfect place to buy a certain stock actually. Okay, so you guys have to focus a lot on accumulation zones, and I'm gonna teach you a lot in this particular case. Okay, now, so this is the criteria of an accumulation zone. Perfect. Now let's talk about reaccumulation zone. Reaccumulation zone, very simple. After an accumulation zone, you'll get an uptrend, also known as the markup phase. Okay, usually in phases of the market, they consider it as a markup, but we will consider it in a simple term, uptrend actually. Okay, so you'll get that higher high, higher low, higher high, higher low, higher high structure, and again you might get one more sideways market actually. Now, what is the criteria of a reaccumulation zone? Same thing, whatever happens in an accumulation zone, same thing happens in a reaccumulation zone, where let's assume smart money buyed 10,000 quantities right here. If they feel, let's assume, as per their own analysis, if they think that particular stock still has a potential to create an up move, then they'll buy more actually. So this is where they're going to buy it actually. The reaccumulation zones are where the smart money buys more of the quantities actually. And here in this particular case, the criteria of a reaccumulation is nothing but after an uptrend, okay, after an up move, you'll get that sideways momentum. And again, it will give you a breakout towards the resistance of that reaccumulation zone. Okay, simple. So that is the criteria of a reaccumulation zone. And this is a good example of a reaccumulation zone actually. This area, this is an example of a good example of a reaccumulation zone, but still I'm going to give you one thing. Yeah, this one. Perfect. See, you're creating that higher high momentum, got the sideways market, right? Breakout, retracement, boom. Perfect. So this is the example of a reaccumulation zone. Now, after a reaccumulation zone, again, market will create a momentum. So uptrend. Now, at some point of time, market has to create a downtrend, right? It's not like market will be in uptrend forever in one shot actually. It will go at some point of time. It might be a small corrective in a higher time frame, but in a lower time frame, it will be a downtrend actually, right? But that downtrend, or this is where that you're gonna get the distribution zones actually. And what does a distribution zone does? Well, the smart money who would have buyed at the accumulation zone and a reaccumulation zone, they will book their profits at the distribution zone. Again, the same vice versa concept. They cannot buy the entire quantities in one shot. It's exactly the same thing. They cannot sell at one shot actually. It'll be a drastic downfall if they sell it. That could lead to a market crash, right? Because smart money, they buy in huge quantities actually. So that is the reason they are not allowed to do that. But instead, they will liquidate it slowly. They will book their profits slowly in a certain range actually. And this is where the distribution zone occurs. And the criteria for a distribution zone is nothing but after an uptrend, you'll get the sideways market and it will give you a breakout towards the lower side. Okay, it will break the support of that range actually, that sideways range. And that is the criteria of a distribution zone. Okay, and the example of a distribution zone, this one. Perfect. See, after an uptrend, market went sideways and started creating a lower low momentum. So if you're a person who's actually trading in the futures chart, in the derivatives market, this distribution zone trades will be very effective because trust me, as buyers, I have observed this in the market, more than buy momentum, the downtrend momentum are very aggressive actually. And you will get really good setups in a short selling actually, mostly compared to a buy one, because the uptrend setups are usually stable compared to a downtrend setups actually. You just have to enter at the right section of the market. That's it. Okay. Exactly at the breakout of the distribution zone. or a breakout or a redistribution zone. This is where you have to enter your trades actually. And how do you do that? I'm going to teach you that. Okay, don't worry. Now, so after the distribution zone, downtrend starts. It can be considered as a markdown phase or a downtrend. And then after a downtrend, again, you might get the redistribution zone. So usually what happens is, I told you, right? They buy 10,000, let's say they buy 5,000 more right here. So they cannot dump everything in one particular zone. They might, dump in a series actually. So it could be, you might get one more sideways market, and that is considered to be a redistribution zone in a downtrend. Whereas you'll get it after a down move actually. And then after creating that sideways momentum, you will again get a breakout towards the support actually, or you can call it a breakdown actually. Okay. So breakdown towards the support. And that is the criteria of a distribution zone. Okay. Simple. An example of a redistribution zone is this one. Okay. See, market is creating that lower low momentum. Market went sideways and broke towards the lower side actually. Right. Simple. Perfect example. See, I can give you hundreds of examples, but I'm just giving you a simple one. In the upcoming days, I'm going to show you with live market trades actually. Okay, don't worry. Now, finally, again, I have mentioned it as accumulation zone. Why is that? Well, market cannot stay in downtrend forever, right? At some point of time, again, you have to shift its gear towards uptrend. So again, that cycle continues. So accumulation to reaccumulation, reaccumulation to distribution, distribution to redistribution, again redistribution to accumulation zone, again accumulation to reaccumulation. This cycle keeps continuing actually. But do you think exactly the same way that market works? Well, if you ask me, no, this is not how market actually works actually. Like, let's say accumulation and reaccumulation is fine. You will get once in a proper highs and lows actually. But reaccumulation can occur multiple times actually. Okay, redistribution zones can occur multiple times actually in between the distribution and accumulation zone, or between accumulation or distribution zone. So this is, don't worry about that. This is the theoretical part. Understand this concept. That's enough. I'm going to show you some examples with time so that you guys can understand the depth of the market in the most simplest manner as much as possible. Okay. So hopefully you guys understood the basic concept of the 4 phases. Now the main part, okay? Now as you can see, I have a chart right here, right? Axis Bank. What kind of sideways market do you think this is? Well, the criteria is very simple. You are getting that higher high momentum where after an uptrend, market went sideways. It's giving you a breakout towards the higher side by breaking the resistance. So this will be considered as a reaccumulation schematic, or you can say is reaccumulation zone. Okay, reaccumulation zone. Perfect, right? Very simple. Now, how do you draw them? What do I mean is that how do you recognize? Because if you have seen in most of the examples, right? Let me open the slide again. You've seen most of the examples right here. It's very random. You'll get that fake breakouts right here. Right? Multiple times you'll get that fake breakouts and you don't know how to execute a trade right here. So how do you recognize them? Well, to identify these kind of fake breakouts, we can actually use Wyckoff schematic concept actually. But if you ask me what is Wyckoff schematic concept, well, you could be new to our channel. Well, I have already made videos about Wyckoff schematic. Okay, it's already in a playlist section. Go ahead and watch it. I've explained how a sideways market works out there. Like I've explained it in a different phases actually. You'll get a clear-cut idea about how sideways market work. Okay. After watching Wyckoff schematic, you can start watching multiple time frame analysis part 1 and 2 to understand how different types of sideways market can be traded properly out there. Okay. And this is also one of the good videos that I've uploaded. So you can watch these 3 videos after watching Wyckoff schematic. Okay. So please go ahead and watch it. Link will be in the description for the playlist. So you'll get it. Okay. But now at this particular point, can I trade this reaccumulation schematic? Was there any opportunity that I could have traded? But if you ask me, what I would do is very simple. Take out a horizontal ray line like this. And the trick is very simple. Draw the first higher high and the higher low. Simple. This is your value area. This is the area where cause is being built actually. Okay, and whatever the excess, let's say if market goes up and again comes back inside the area, and this will be your test phase, or you can be, in a Wyckoff schematic phase, we call it a upthrust. In simple, when market goes below and just bounces back, this will be considered as a spring. So those terminologies I've used in the Wyckoff schematic, but all I can say, these are just extinctions actually. These are the test extinctions, and you just have to mark like this actually. Okay, just mark the high of it. Simple. Okay, if you have a price like this, then you just have to mark a level like this actually. That's it. Okay, now after this, if you're getting a proper breakout with an increasing volume, and that retracement is what you can actually buy. Okay, a very simple approach. But if you want more confirmation, like let's say if you want to take the trades, like for being 100% sure, if you want to go in depth about it, then you have to watch the Wyckoff schematic videos and multiple time frame videos for more idea. Okay, this is a very basic idea about how to trade the sideways markets, how to capture this momentum. Because if you know the concept of cause versus effect, the three basic Wyckoff law, right? I have explained the concept of cause versus effect in the basics. So if there is enough cause, you will get an effect no matter what actually. For a smaller cause, you'll get a smaller effect. For a huge cause, you'll get a huge effect. In this particular case, for this much cause, you should get an effect towards the higher side or a lower side. So wherever it is, it has given you a breakout towards the higher side. And obviously you can expect this effect actually, if you want to capture this momentum, and this is the right point to capture the momentum. And how to execute a trade with proper confirmations, that is explained here in Wyckoff schematics and multiple time frame analysis videos. Okay, so hopefully you got an idea exactly how to recognize the phases of the market from hereby, and try recognizing it. If you have any questions, do not hesitate. The Telegram number will be in the description. Please message us. We are here to clear your doubts actually, and you can ask us any doubts related to volume spread analysis and Wyckoff schematics. Okay, and also if you have any questions or any request, then go to the comment section of this video, place your request. We are here to make sure that the beginners could understand the market in depth actually. We want to give you the best knowledge out there. So that's it for this video. Hope you liked it. If you liked it, please like it, and we'll see you in the next video. Goodbye.